This is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Forex market analysis for you for December 12th, 2019. Can you believe we're almost halfway through December? We're winding down the fourth quarter and the year 2019. So before we get into our analysis, let's just pull up our disclaimer to remind you that this webinar is for illustrative purposes only. And now with that, let's go to our live action screen to see what is going on in the Forex markets. All right, so here we are. We are at the forex-trading-unlock.com website, and we're on our workstation page, which you can access from the menu bar at the top of the web pages. And we are going to skip over the numbers for today. We've had a Fed week this week, and now we're in the the residual of it. You can see the headlines here on our chart on below our stock twits thing. We'll raise this FOMC dollar down on FOMC stance. ECB signals no changes. Asia rises on trade hopes. So what does this mean? Well, ECB signals no changes. Well, that's nice. That means they're not doing any QE or cutting rates, and we know they're pretty much on the cut, ease, whatever they got to do, because they're afraid that they're in a recession, which it turns out they're not. It has more to do with their own employment turnover because of going towards the direction they have in the industrial complex there. They've lost a lot of auto jobs due to the new electric car industry and everything. So everyone knows that the EU, especially Germany, is one of the biggest producers of autos in the world, and they sell globally in a very large capacity. And due to the Volkswagen, especially going electric on major production cars and a bunch of other manufacturers there in Germany, they don't need the workers anymore because they don't have parts in electric cars that are in gas-powered cars. In fact, there's a lot of parts that are no longer there. So with that being said, you need fewer workers and what have you. So that is why there is a problem in the EU, especially in Germany. And guess what, folks? That's going to continue to happen no matter what over the next few years. In fact, we're probably going to see a rising unemployment rate in the EU sometime next year. And that has nothing to do with global demand or anything like that. That has to do with a systemic change in technology that is a turnover. It's just what it is. There's going to be a continuation because of technology of lots of jobs globally that are going to diminish over the next definitely 3 to 5 years, 10 years for sure. So that being said, let's cover what's going on technically, because fundamentally there's not much to do today. Europe's winding down in another hour or so. We know that the market right now here for the Euro-US dollar has proven to be neutral to higher trade right now. Is it bullish? Well, it is over the past few weeks, that's for sure. We finally broke out of this little lower range part, but as you can see, the market's been in a tight range between just around $1.10 to $1.11.5. That's pretty tight considering this is all trading from. Let's go back to here. Let's do a little line here just to show you what the significance of the average true range can be. Now, average true range was something that years ago was not necessarily. It was more of a gauge for volatility for traders to see if there was a tradable, actionable market. Something like the pound on a dead day still had a big range. All right, so here we have the lower bottom of this range. What do we notice here? For the most part, this is the bottom of where the euro has been trading for the past, let's see, 1, 2, 3, 4, 5 months, with a high of right around $1.12. Okay, so we're just going to put this in right here. So if you see this range right here, $1.0980 to $1.1180, that's a $2 two-handle range for the Euro-US dollar. The Euro-US dollar, when I first started trading this market, used to have at least usually around an 80 pip to 120 pip range back in the late 90s when it took on a 24-hour session basis. Not so much necessarily during the Euro hours or just during the US hours, but a combined 24-hour trade. Definitely there was typically that kind of range, and at least on the average day, and especially on news days, if not more. Now we have news days where next to nothing happens sometimes. It's kind of crazy. All right, so what do we see here? We see a whole lot of nothing going on. We had the central bank weeks are always tough for traders, especially when you start to get into a market like this. It's been pretty much winding its coil and winding down. Now, the reason I say this is because for the euro, which is one of the largest currencies in the world, to be stuck in a $2 range like this and just be bouncing around. It's great for range traders. It's really bad for swing traders because your risk reward ratio is very low. So it makes trading this market very difficult. You see, there's definitely obviously a lot of algo trading for sure that's going on in the euro US dollar. But I would say that as far as independent traders, they're probably looking more towards the pound than some of the other currencies. So what do we have here? We have the low that we set that's confirmed. This was from this low here, we have a high, and then we have a higher move low, and now we're working for a challenge and a breakout of this upper level here. So that's what we're looking for right now. So the trend is your friend. As far as an upside target, what do we have? Well, that's a whole nother story. We're heading into the end of the year. You got to remember that we're winding down this week, we have next week, and after that, the next 2 weeks are going to be pretty much dead because it's holidays all around the world. So, and if global news and wars don't seem to shake the markets up during full day, trading days when the whole world's active, well, sometimes thin markets things happen. So anything can happen. Just be careful. But right now, the Euro US dollar is a bull, targeting at 111.82 level and above there. Obviously, that would have us in a bullish mode, setting the market up to maybe make a challenge of the 112 half, maybe even get the euro back up to a buck 13. The only thing is, I have to say, when it comes to upside trades for the next few quarters, I would say that it's going to be better to be a weak bull looking for little spots and then look to be an aggressive bear into resistance because the euro is artificially being, I would say, depressed because of debt, which means that because of the interest rate skew, people are basically hammering the euro because of the rates to borrow in other currencies at a higher rate, which is a whole other fundamental function of currencies. And that being said, I would say that being along for the next few quarters, definitely have tight stops and know your risk. Watch your swing points because any indications of a sell, like for instance here, like when you had this rally up to this high, we made a higher move low, we failed to make a higher move high, and that's when we had this little correction into a neutral trade, which when this first took out this low right here, uh, that put us obviously off that rally train that had occurred right there, and then we settled into this digestive phase. So you can see that as strong as this bull was, after it digested a little bit and tried and failed, it came all the way back to this halfway part, actually below that from this initial move. So that technically speaking, that's a big deal because that means that as bullish as this is, it's not this whole area here over the past 5 months. This is not a basing. This is not a long-term building of longs for the euro US dollar. This is a neutral trade. It's because as bullish as this market is trying to become, there's enough fundamental factors that just suppress it. It has nothing to do with news. It has to do with the actual money flow that's going on. And the reality is that we have an economic war because certain countries now are trying to not hold dollars as much as they can. So by not holding dollars, what currency would you go to? Well, the pound's in a little bit of a flux because of Brexit. The Swiss would be one, and then there's the euro. And there you go. So that's where we're looking at. Now, just to give you an idea of maybe as to where the euro might go, let's go look at the dollar index. Now, we're looking at the euro a lot now. We're going to go on to a couple other currencies still. But this is what I wanted you to see. Now, take a look at this. Yesterday, the dollar index fell apart and pressed new move lows, confirming that this is a neutral to lower market going on. We had made this higher move high. Now we've made a lower move low. The dollar is bearish. Now we're coming on. Let's show you the monthly. And this is where you're going to start to see what I'm saying. Now this is why we're bullish the euro. Remember October, folks? Okay, I don't know if you do, but if you've been trading the currencies, you remember that the dollar was just shellacked in October. Started on October 1st and pretty much ran against all the other currencies. The dollar got hit. This red line here is a bearish engulfing line. That is a sell signal. That is a major, 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 major sell signal. So now what does that mean? Now here's the thing is the low of October was 97,141. The low of the month of December is 97,039. So what does that mean? That means we have now confirmed for sure right now that this October sell signal is back in play. The November rally that had been seen in the dollar was just a corrective rally. So what does that mean now? Well, I'll tell you what it means. It means that the broad basic currencies in this world are probably, and we're just going to do like kind of like a 45-degree line here. Now, if it was a steady trend lower, it's probably going to buffer along this line right here. Now, here's something you want to also take a look at. This market's been trending and needling its way higher for the past year, over a year. Look at where we're at, folks. We are resting right on that support line. So now let's make it a little bit more clear. Excuse me. All right, so here is a shoulder. I'm going to show you this. Okay, here's one shoulder. Okay, you got that? And then we have right here, we have the head. Okay, so far that's looking pretty good for those of you know basic technical analysis, right? So what do we have here? I'll tell you what we have here. Right now, we have a potential head and shoulders formation that is happening right here. So this is the dollar index, folks. Now this is huge because the dollar index is the broad base of the currencies, the major currency crosses, and what the direction they are going versus the dollar. So look at this. So we take the high that was set in October. Right now we're basically not quite $3 below it on a dollar index. Not that necessarily big of a move, but the biggest point is that we had the sell signal in October, which is a high probable Japanese candlestick pattern. Now, when you get a bearish engulfing line, that high becomes your cornerstone for direction. So as long as the market stays below that, it's going to be in a neutral to lower posture, at least for a few months, because it's a monthly chart. Now, in November, it looked like the market with the dollar was just coming back with a vengeance, and it was going to be strong. Okay, well, we know that it was, but didn't bring it all the way back to those October highs where the market fell from. And then right off the bat, December started, and look what happened. We just made a new low, and now we're not quite halfway through the month. That's a big deal. That means that within 2 weeks, we've corrected back the whole month of November. So on a fundamental and technical basis, that means momentum is definitely for the bulls right now. And then we have the longer term uptrend that we've had. Okay, so maybe this is where we're targeting right here. It's somewhere around this area down in here, this upward sloping support line here, which supports the major trend. That would be a good spot for the dollar to pause on. Maybe then it'll continue higher. But right now we have a short-term head and shoulders pattern that is definitely emerging here. And I would say that right now we have good odds of the market over the next few months as we go into the first quarter of 2020 that is probably going to head down towards this 95 to 92 half area, somewhere in this little spot right here, which is pretty significant for when it comes to direction. So now if that is true, we go back to our Euro US dollar trade, then that would lay credence that if the dollar is weakening, that the Euro US dollar would then start to change. Okay, oh, this is on the monthly basis for the Euro US dollar. We don't want that. We want the daily. Okay, oh, and that's another basic thing too. All right, so here we go back to the Euro US dollar. So on a daily basis right now, we're pretty much unchanged, unsettled, or unchanged on the day. The Euro US dollar is going to continue to, sorry about that, to be in a quiet little trade probably today as it digests the Fed move from yesterday and then Fed announcement and stuff. But as a whole, we're going to look to be buy dips. That's the kind of scenario we're looking. Now this trend has been kind of steep for the past couple weeks, so it's not out of the realm of possibility, especially the euro. Remember how it doesn't seem to want to be a bull no matter what, that it could correct a little bit as it grinds higher. But I would expect that most likely before the end of the year, we're going to make a challenge of this 111.82 before we take a test of this 109.81. So that means that, like I said before, that because the dollar index is looking bearish and is making its way down, that most likely currencies like the Euro US dollar are going to get a lift. So let's take a look at the pound real quick. Let's see the GBP, USD, and as you can see, all you got to do is change the symbol in the upper part of the chart here, and then you will get your new chart. All right, so we have the British pound US dollar, which is lower right now against the dollar. Now, The dollar index today is getting a little bit of strength, but that's because it sold off big yesterday. So today's a digestive day. So any pullback like there is right now, like the euro yen made new highs, and or excuse me, the euro US dollar made new highs without being really holding in that rally. So now we're here in the British pound US dollar, which is now correcting off of yesterday, but this is coming off of its highs. So that makes sense. So right now we're kind of in this buffering up against resistance. So the dollar is getting a little bit of a reprieve today. But that doesn't mean that the bulls aren't going to snap right back in those other currencies and drive the market up to new highs before the close today. So right now, I'd be if you're taking profits as a bull, it's maybe not the worst thing in the world. If you're a seller, I'd be very careful, and I would use today's high as your risk. Anything beyond today's high, well, you're fighting a freight train higher, so that would be stupid. The trend is your friend. If you're already long, then I would say that you got a little bit of room, and I would play off of this low before the market broke out. So let me make this a little clearer for you. So I'm going to put one major directional pivot right here. So this green line right here is going to be your directional pivot. This yellow line here would be your failure. Anything below here takes us out of this consolidation range and then makes us to pretty much be that it may not be a bear market that's unfolding, but it could be a nice bearish correction because remember, this trend has been going higher for quite some time. Now, what do we have going on that could shake things up here? Well, unless you've been living in a closet for a while, you're aware of Brexit, and there's definitely the elections that are going on in the UK. So, and when that happens on Friday the 13th, not necessarily the greatest date when it comes to Europe, well, especially France. Uh, Maybe people who know history know what I'm talking about. We're not going to dwell on that. So, but here is your line in the sand. So we have elections tomorrow. So right now you're probably going to see, even if the dollar was to explode to the upside or the downside, we're heading into elections. Excuse me. So that's probably going to be a sideways trade in the pound. So there's most likely not very much opportunity for pound traders right now, especially versus a dollar. So if you've been a bull and you want to ride the course, then you got a nice little um, bit of the house money on your side, then I would say you're probably in a good shape. Maybe hang on, or if you're looking to take profits, this would be a good spot. If the elections, how it's going to go, whether the market rallies or breaks initially, or goes and continues higher in a longer term trend, that's a tough one to call. I'm not going to even try and touch that right now. I'm just looking at the technicals because the fundamentals are going to be too hard to gauge because we have no idea how the election is going to happen. There's a very big optimism as to how it's going to end up, but we all know that when it comes to polls and every type of media thing as far as predicting elections, that's probably the worst thing you can do is pay attention to them. All right, so that being said, we're looking for a quiet next couple days in the pound US dollar. So let's look at the US dollar Swiss because this will give us another indication of the dollar strength or weakness. We now know that the dollar is under pressure. And look at this. See this? The Swiss made a lower move low yesterday, made a lower move low today, and then bounced. So here you go. Here's your dollar bounce. The Swiss is always a good indicator with the dollar index, or excuse me, with the dollar and the dollar index because it's one of the reserve currencies as well for flight to quality. So if the dollar is truly weak, typically the Swiss is strong, and obviously the opposite is for the other scenario. So that being said, we have a little profit taking going on today, and there's no reason why we wouldn't get a nice little bounce and a correction here. Obviously, we made a higher move high. We've made lower move lows, which has this net market now another rejection of parity with another reason to be in a neutral to sell posture. So if the dollar index is going to remain in a negative posture and continue lower, then this high here in the Swiss is probably the last time you're going to see this market brush up against parity for, I would say, at least the next few months. Now, real quick, let's look at the US dollar yen and see where that's trading at. And oh, look at that. Every time, this is the amazing thing. This market, no matter how much the dollar index breaks, the yen will only sell off a little bit and then consolidate. While the other markets are totally trashing the dollar, the US dollar can't gain against the yen, probably because of the trade issues that are going on. Now we have a slight little rally of the dollar, a little consolidation after being lower for so many sessions. And look at this, the U.S. dollar yen, boom, it's like a balloon underwater compared to the euro and the pound, let alone the Swiss. So the yen is one of the major currencies, but it's the beginning of the lesser majors, and the fact that this is where the volatility is, this speaks worlds about the dollar. Now, this also confirms the situation that if the dollar is strong, the yen is weak. If the dollar is weak, the yen is not so weak. That's just the scenario that we're kind of in right now. So we have now looked at these markets and we know where the majors are going. And because of the quietness, like I said, I think we have a digestive day. We have with the pound, we have an election going on. So tomorrow it's going to be a really rough trade for the dollar versus your crosses. I would say that right now, this is a key thing with the yen. It's still neutral to higher. And like I said, even if the dollar index gets beaten down, I wouldn't be too bearish on this currency. So with that being said, we are going to jump to one more slide here. If you want to learn about the dollar index, about that sell signal, the high probable Japanese candlestick pattern, you can read all about bearish engulfing lines and how to apply them to the markets in your trading in the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com and paperback and Kindle version. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in the Forex markets, the futures markets, the options markets, the stock markets, any market, and you'll also learn how to use correlated trades. So for instance, like this dollar index trade, how can you benefit as a stock trader or someone who doesn't touch the Forex or currency markets directly and utilize those signals? Read the book and you'll learn all about it. So with that being said, my name is Teddy Keckstead from Forex Trading Unlocked, and you can always check us out at www.forex-trading-unlocked.com every day and see what's going on in the Forex news, and you can do all kinds of analysis. Technical and fundamental information is available there every day. With that being said, you have a good trading day.